Good day, everyone. Hello, my fellow investors. Welcome to today's professional market analysis. This is a live session for you guys. I'm your market analyst today. Today, we're going to focus on escalating expectations for Bank of Japan, BOJ, the rate hike, and tightening of global liquidity, Bitcoin's price pressures, and the macroeconomic environment. So today, mostly, we're going to focus on the news and some analysis of the current market. Also, the challenging rebound dynamics of the US tech stocks. So Tesla, Nvidia, whatever you can think of, Intel, we're going to discuss. And if you have questions, you can comment below. I'll try to answer everything I can. And yeah, we're going to move on with these topics today. So for the core topic I planned, under the current macroeconomic environment, can US tech stocks sustain their rebound? Do you think they can? And how to navigate investment opportunities in key tech names like Nvidia, Google, Amazon, Oracle, and Tesla. So today we'll start with a breakdown of macroeconomic events. Then we'll analyze index signals and individual stock strategies. And our session will also include a small Q&A for you guys to interact with me. But if you have questions, you can also drop them in the chat. And I'll take my turn throughout this live to answer you guys. So if there's anything you guys want to discuss during this live, let me know. You can comment below. I can't promise we can reach everything today, but I'll try my best. So let's look at the interpretation of BOJ rate hike signals. And what was the global impact yesterday? Because Governor Kazu Ueda emphasized in his policy meeting So let's look at the news. Wall Street future falls, yen boosted by Japan rate hikes. So the European stock market fell on Monday, but Japanese government bond yields got a boost because of the hike in interest rates. So what was the global market? And Kazu Ueda emphasized in his policy meeting that the December 18 to 19 meeting will comprehensively assess paths for future rate hikes, for the future interest rate hikes. This follows the January adjustment raising, which raised the benchmark rate by 25 basis points to 0.50%, a 17-year high. Driving factors include core CPI persistently exceeding the 2% target, reaching 3% in December. So the driving factors include CPI, but do you think anything else? I think we got to do more research on this. Yen rose 1.5549 per dollar after these remarks by Governor Kazu Ueda. So two-year Germany rose 2 basis points to its highest since June 2008. Quite a strong growth. Let's move on. So what was the market reaction? The yen appreciated 0.4% against USD to 1.5538, with 2-year JGB yield hitting 1.01%. So what might have been the global implications? Let me read through here. What I can summarize from this, the high bolsters yen, attractive, prompting capital repatriation. So from emerging markets and high-risk assets, transmitting liquidity and tightening to a stronger USD, what we basically saw above, 1.5549 per dollar. So the Fed December rate cuts odds have fallen from 80% to 47%, which if you have seen the news, then you would have read about this, but I'm just going to share with you the basics. Tech valuations face re-rating pressure. Nasdaq rebounded 5% last week, but may retrace at open. VIX is at 17.9, potentially breaching 20 short-term, heightening volatility. This signal is not isolated but a catalyst for synchronized global monetary tightening US tech. Rebound faces short-term headwinds. Through midterm, it's an adjustment rather than a reversal. Do you guys have any questions on this topic? I think this is pretty simple news, and we just have to pay attention to the 18th and 19th of December meeting, as it will more comprehensively assess the situation, and I think that's when a lot of ears will be open. So I think for this news, we just gotta stay aware. Now, another question I've received, which I really wanted to talk about, was Bitcoin. Let's look at the overall weekly chart first. All right. Let's pull up some news so we can just see it together, have some ideas. This may be a bit of a personal view, but just in case, let's review it. Let's see. As you can see, prolonged solid something multiple net value asset. So before this live, I've comprehended a bit on Bitcoin's past for October and through November what happened. So let's just recap a bit. Bitcoin has retracted from its October high of $126,000 to $91,000 range. And it erased a lot of yearly gains and erased a lot of positions. So what may have been the drive for this was the Fed dovish expectation revised post October 25's BPS cut. Powell also signaled December uncertainty among robust jobs data, dropping odds 50-50. Also, ETF net outflows exceeded 100 billion USD, which is institutional de-risking. Also, I'm not sure if you saw, but Trump tariff escalations, which was 25% for Canada and Mexico and 50% on China. Amplifying trade uncertainty, curbing risk assets. So what may have been the rebound signal? Let's look here. One moment. As we can see here, it hit. Just a moment, let me see the difference here. I think I'll use a box for you guys so it's easier to see. So what we can see here. So as you can see, the new support level was $80,000 at 200-week MA. Holding there could enable a December low volatility bounce to $97,000. But ongoing whale sales require ETF inflows and Fed resolutions. So let me just see this here. I think a risk proxy, Bitcoin resonates with the BOJ hike from Japan, and the dynamics in short-term rebound odds low with 30%. I think a recommended observation on my side would be the 80,000 benchmark if you were to short. So I think the US tech rebound and the BOJ hike and Bitcoin downside overlay highlighted a global liquidity shift from easing to gradual tightening. High growth tech valuations are sensitive and the AI narrative persists. But risk funding costs could trigger 10 to 15% pullbacks. S&P 500 and at 6,818, but extreme signals flat adjustment. For the short time, rebound probability dips to 40%. 40%. However, pivot defense stance, boost cash allocations, and enter post support confirmation. This bull market is reshuffling. It's not an end. 2026 may build an uprise. Let's look more into this news. So yeah, Bitcoin fell below 90,000. And on Monday, sell-off gathered, face pulling the steps. The monthly decline, this was the steepest monthly decline since 2021, as renewed risk aversion drove investor out of stocks and digital assets. This is basically the world's largest cryptocurrency, and it fell 6.1% just like that. In December, I'm forecasting it will probably rise again, as this has been in a long time the lowest it has reached. But for 2026, I'm gathering a stronger impact will probably come. Let's go. Sorry. So next, I want to go into one moment. So next, I want to go into the So now we can move on from this. Let's read. So last week, the S&P 500 had 5 straight days of gains, pushing it to new heights. But here's the interesting part. The put-call ratio dropped to 0.45. This is extreme level of optimism. Historically, a low put-call ratio like this has been a signal of potential reversal pullback in the market. So it might not be worth watching for signs of weakness. On the flip side, the VIX put-call ratio surged to 1.47%. Let's look into this. I think I'm gonna look at Yahoo. Let's see an overall analysis for the S&P 500. Let's see these 5 days first. Look at candle. So let's look at the S&P 500s. Yeah, on the flip side, the VIX put-call ratio surged to 1.47%, which indicates growing concerns in the market. If we look back to 2022, right here, let's see, 2022, let's go to 2022 right here. Oh, I can't draw. Anyway, we'll look at, this is the 2022 benchmark right here. And if we look back at 2022, we saw similar signals before the bear market really took hold. So this is really something to keep an eye on. I think the key levels to watch are, let's discuss on this. For the S&P 500, right now it's hovering around support at 6,818. If we see a breach of this level, here, right here, we could be looking at a possible pullback to 6,000 right here. The Dow is a bit more steady, so if you want to defend that 45,855 level, as for the Nasdaq, it's a 22,070, and it looks more elastic, which means it's more likely to lead the downside if the market turns. So my viewpoints for the S&P 500, if the S&P breaks below 6,818, we could see a shift away from tech stocks into more defensive positions. It might be a good time to hold around 20% cash to stay flexible and prepared. Remember, proactive preparation is always better than reacting after the facts. Stay ahead of the market, guys. Do you guys have any questions for the S&P 500? Now, I think we can discuss, however, we can also move on for the next topic, which is NVIDIA. This was also highly requested, and I take a look at some of the news. We can quickly discuss. But before that, if you guys have any questions about the S&P 500, let me know. Or do you guys have some insights you guys might want to share with me? All right, I see some of you guys have questions. Nice. Just stay aware of the current situation. So today we're going to go through more of the news. All right, let's talk about NVIDIA. Again, and this time we're focusing on some key challenges the stock is facing. So we all know NVIDIA is a major AI player, with its GPUs being central to everything from machine learning to data centers. Literally, NVIDIA is the world's largest chip manufacturer currently. And I think any AI company is surrounded. They need them. They're currently the most advanced. And most AI platforms are currently using their chips. So, but right now, the stock is hovering nearly $178. And there are a few red flags we need to be aware of. First off, there's a rivalry with Google's TPU, which is a tensor processing unit. Have you heard about it? Have you heard about the TPU of Google, guys? Okay, if you're not sure what the TPU is, it's a tensor processing unit. It's a type of application-specific integrated circuit. So it's designed specifically for accelerating machine learning tasks. Anyone heard of TPUs, guys? So it's basically a computer chip made by Google that's really good at doing one thing, which is AI tasks, like teaching computers to recognize images, understand language, and make predictions. While NVIDIA's GPUs, they're the chips that you hear about for NVIDIA, that people talk about gaming or AI. They're pretty awesome. TPUs are built to be even faster, more efficient for specific AI tasks. So basically it's like a sports car. Might be faster than a regular car for one type of race. But the regular car, like a GPU, is better for a variety of things. The big deal is this. Google is using TPUs to compete with NVIDIA in the world of AI. If computer companies start using TPUs instead of NVIDIA's chips, that could hurt NVIDIA's sales. So do you get it now why Google and NVIDIA have a quite, I would say, conflict? So it's basically on our race. Does that make sense, guys? So let's go back to the rivalry between NVIDIA and Google's TPU. It's starting to heat up, and that's a huge impact on NVIDIA's market cap. In fact, this competition has erased over 1 trillion. 1 trillion from its market value. That's a lot of money, guys. That's massive. It's putting a lot of pressure on the stock. And to make things matters worse, we're seeing some GPU price erosion. Basically, NVIDIA's ability to command premium prices for its chip is under pressure because it's getting more competitive. It seems like when someone launches something for the first time, they can place it at a higher price, but when more companies start to develop it together, then the price will become competitive. So this is starting to show a margin compression, which could hurt overall profitability going forward in next year. However, who knows? This is right now an AI race between two large companies and others. Now, as we look at the chart, NVIDIA is still in a downtrend. Do you see here? NVIDIA is still in the downtrend. It's still in a risky position. It's in a downtrend channel. However, 164 is a key level to watch. Right here. This is a key level for you guys to watch. Why? Anyone knows why? Anyone in the chat knows why? Because it's where we expect some technical support, but right now there is no solid defense beneath it. If we breach this level, the 164, if we breach this level, we could see the stock probe lower in the short term. Basically like that. It is a possibility. So what is my viewpoint for NVIDIA? Steer clear for now. There's a lot of risk here, especially with the technicals and the broader market uncertainty. If we see 164 stabilize and hold at support right here, then I'd consider adding more. But until then, it's best to sit on the side and just watch. But if you're the guy or girl who likes to take risks and is risk tolerant, a small put position could make sense as a short-term play. Don't play long-term right now. Just make sure you watch the pre-earnings environment. NVIDIA could make a big move. That's why it's important we watch the news. Yeah. So don't get caught off guard, guys. Pay attention. Big moves are coming. So yeah, be cautious here. NVIDIA's future is still strong, but there's a lot of volatility in the near future. In the near term, the year is ending. People are gonna make some big moves. Guys, do you have any opinions? Comment. I want to know some of your ideas, what you guys think. Share with me. So, one more thing. A lot of you guys asked me to move to Google. And in this session, we're gonna run through the news and what they mean. But before that, if you have any questions at all about NVIDIA and Google, if you still don't understand what TPUs are, you can come and ask me, comment. I'll share with you. I'll explain more. All right. I'll go to the monthly chart for Google. Sorry, let's go to the weekly instead. We'll take a look. To be honest, we're seeing a lot of movement. Sorry. Oh, okay. Wow. It's hitting a high right now. Let's take a look at Google. And let's break down Google right now. Currently, Google has been stuck at a high range consolidation. It's been trading at about $318.54, meaning it's bouncing upwards. As we can see here. And down with a certain price range without making any big moves in either direction. So currently Google's been bouncing up and down, and it's in a high range consolidation. It's not moving in any direction. Let's break this more down. Because the AI ecosystem is still looking strong for Google, especially with things like Gemini 3.0, it's their latest AI model. I'm sure if you have used Google, the first thing that pops up on your Google is the Google. You know, there's an AI answer below when you ask questions. Yeah, that's the Gemini. And also the ongoing use of TPUs, what I explained before, those chips that we just talked about. So the AI story is solid, but there's also some risk from liquidity squeeze, meaning there's a chance that things could pull back or lose momentum if the market gets tighter. Do you guys read news on Google? Do you need me to pull anything up? There's a lot of good resources on Google, and I think you guys can pay attention to the news. What I would recommend for you guys to watch, the first key defense, which is at 300. I'll add here. The first key defense, sorry, I'll put it for you here. Let me put it in capital. Key defense. Oopsie. Key defense. So the key defense is at $318 currently. If Google holds this level, it signals strength. This $318, sorry, I'll put it here. I'll make it bigger so you guys can see. Key defense is at $318. If Google holds that level, it signals strengths and could be a good spot to make small positions, range plays. Basically, buying low and selling at higher within a range. So don't put long positions. If Google drops below, if Google drops below 318, anywhere below the 318, and starts to breach $305, it could potentially indicate a larger pullback or potential weakness in the stock. So, what is the strategy, guys? Any ideas? Let me give you some ideas. Consolidation buildup is looking like 60% chance right now. 60%. Yeah. Let me delete my ugly circle here. 60%. This is what the consolidation buildup is looking like. Meaning there's a higher likelihood that Google will stay in the sideways pattern for a bit longer before making any big moves up or down. There's also a moderate risk trap, meaning you could get caught thinking the stock is about to break out when it might actually fall back down. So let me give, any of you guys have some ideas on the action plan? What are you guys gonna make? What moves are you guys gonna make? Tell me. What's your plan? So let me share my plan before you guys jump to conclusions here. You can trial long positions. Above 318. But this is only, but if only it shows strength. So you can trial $318 above, but only if it shows strength. This is your signal to enter, basically. This is if you're looking at long trial long positions. But Let me erase my thing. So, but if the stock breaches below 318, meaning it breaks, you de-risk, meaning you enter your position or go to cash to avoid further losses if it breaks. In short, my opinion is wait, and see momentum. Pay close attention to volume. Pay close attention to volume. That's going to tell you if a breakout or breakdown is real. Without volume confirmation, it's best to stay on the sidelines or play cautiously. Do not jump. It's important that you stay afloat. Does the strategy make sense? And let me know if you ever want to dive deeper into some of my points, because I'm not sure what each viewer has, what opinions you guys hold. It's important we can share with each other. If there's no questions, I'll move on to Amazon. Any Amazon holders here? Comment below a thumbs up if you're an Amazon holder, and comment down, thumbs down if you're not an Amazon holder. Let me just open here. Let's just add it. I forgot to add it here. This is my new setup, guys. Any Amazon holder? Any Amazon holders here? Comment and thumbs up, guys, so I know you guys are here. All right, I see you guys. Some of you guys commented. Nice to know you guys. Hi guys, thanks for joining. All right, let's talk about Amazon and where it stands now. Oh, I see more Amazon users here. Do you guys see something? Amazon is up about 10%. It's hitting $232.37. Sorry, 0.37. Amazon is up 10%, and it's gonna be hitting 200. It already hit. Sorry, $234. What do you guys think about this? And it's now gazing its 30-day moving average. This is a key technical level that traders watch. And right now, Amazon position looks vulnerable. Currently, Amazon is in a tight spot. The stock is in a tight spot. It's up significantly, but with the tightening liquidity in the market, which means there's less money flowing through the system, the risk of a pullback is higher than a breakout. Without a volume surge, it's hard to justify expecting a sustained breakout at this point. What are some key levels to watch? I'll write here, key levels to watch out for. Do you guys know? Comment below, share with me. I'll use a different color so you guys are more clear. Key levels to watch out for Amazon. $230. This is a neutral watch level. So if Amazon pulls back to this level, could indicate a base being, sorry, I'll put it here, a base being built. So this $230 is important for you guys to watch. This is the neutral level, and if Amazon starts to pull back, this could indicate a base being built. Right here. It's important to watch this level and how it goes. Is it building this type? Is it? Or is it gonna... Or is it gonna maybe do something like that? Rebrace, retest, and up. So this is a key level for you guys to watch. But it's hard to justify without a volume search. But if it falls through $230, that signal the pullback could be more serious. Now, let's see my viewpoint. I hope you guys can share some of your viewpoints as well, so others can see also viewpoint. Number one, avoid chasing. Avoid chasing here. If you haven't entered yet, this isn't the time to jump in. Especially if you're thinking about a breakout, don't jump here now. Avoid chasing. Number two, wait for a pull back. I'll delock here. Wait for a pullback. So what I mentioned above, right here, this is very important. Sorry, but I'll use this. Avoid and chasing, wait for a pullback to be confirmed. If $230 is the neutral level to watch, pullback at this level could indicate a base being built. If Amazon pulls back to support around $230 and starts showing signs of holding, that could be your entry point. If it breaches, sorry, 230, you'll want to prioritize defense. Why? Because consider crashing out or staying sidelined until these things settle. It's important that you stay ahead. It's important that you pay attention. The bottom line for Amazon, with liquidity tightening, there's a higher chance of a downside move, a 10% pullback over a big breakout. Right now, patience is key. Watch for the pullback to validate before entering. This is very important, guys. Validate before entering. This is very important. Do not jump, do not chase. Validate. Does that help break down things for you? Let me know if you want me to be more detailed or clarify any of my parts. But I think currently it's very clear. Don't chase. Wait for a pullback. If it pulls back to $230, then it will show a sign of holding, and that could be your entry point. However, if it breaches 230, prioritize defense, guys. Because a crashing out or staying sidelined, and then you can stay sidelined until things settle. If liquidity is tightening, as we can see, there's a higher chance of a downside move, a 10% pullback. Let me know if there's anything you want me to clarify. Oh, I see someone wants to talk about Oracle. All right. Then we'll move to Oracle. Let's see. We'll go to the monthly chart first. Hi, new watchers. So let's talk about Oracle. The stock is currently trading at around $193. It's been stuck in a downtrend, as you can see. It's been stuck in a downtrend for a while, with the trend unbroken at this point. Maybe I think I'll jump to conclusion directly on this, explain my views, and if you have ideas, please share with me. My key concerns. Key concerns. I'll put it here. I'll make it bigger so everyone can see. Key concerns. Number one, let's look at the news a bit before. I'll just pull in some news. Oracle has loads of debt. Debt load. Debt load. Oracle has spent billions of dollars paying back its stock over the past decade, a strategy largely funded by debt. So what does this mean? Oracle has massive debt load of around $1 trillion. $1 trillion. And that's a huge risk. When a company has so much debt, any downturn or increased interest rates can really put a strain on their financials. 2, because of the debt load, there's a negative free cash flow, which is a FCF. Despite their heavy AI data center investments, Oracle is currently running a negative free cash flow, meaning they're spending more than they are bringing in. This is a red flag. especially for long-term sustainability. Do you guys have any other opinions on that? Anyone? Oh, nice. We're getting some response. Yeah. So let me move on to 3. If you're not, sorry. Dependence on OpenAI. Oracle's reliance on OpenAI for its AI business is a bit too high. And if anything changes there, Oracle could face a big setback. Let's see any news account. Let me see anything. Let's see some Oracle. OpenAI's partners are carrying $96 billion in debt, growing risk of loss-making AI compute. OpenAI has made 1.4 trillion commitments to produce the energy and computing power it needs to fuel its operations in the future. Here's the breakdown. 30 billion USD already borrowed by SoftBank, Oracle, and CoreWeave. OpenAI signs $300 billion cloud deal with Oracle for AI. This is old news. However, this is a staple to look at because OpenAI is something that triggers the actions and whatever the consequences are of Oracle, because Oracle is so dependent on OpenAI for its business. And this high dependency is not something that's good. So now we can look at the risk. I'll put this in red just to be sure. Risk. With all the issues combined, debt, negative cash flow, the risk is really high heading into December earnings. This is dangerous time to be holding onto the stock with these headwinds. My viewpoint, sidestep the minefield for now. If you're not already in Oracle, it's best to stay out until things stabilize. There's just too much risk with all the debt, cash flow issues. Long term, Oracle has AI potential, especially if they can stabilize their financial and shift towards more profitable ventures. But hands off for now, guys. Being hands off for this is the safest move you can do, and wait for stabilization. This is the only advice I can give for now. Wait for stabilization. This is my advice. Only advice, take it if you want. But this is all about sharing. So the bottom line for this, Oracle is not in a good position right now. And with earnings coming up, it's best to avoid the stock until there's more certainty and clarity. Any questions on Oracle? Any questions? Okay. Now for the final review. Let's go into Tesla. Let me just move. Many favorite stock. Any Tesla holders here? Anyone? Comment below a T for me. T if you're a Tesla holder or even a Tesla fan. Just comment a T below. Hi guys, nice to see you. Thanks for joining. All right. So what are we looking at here? I'll go to weekly chart, I think. It's better. Are we seeing anything? I'm seeing a little bit of a pullback here to test resistance, the support. It stayed quite fragment here. This was an important level to watch out for. Sorry, even here. Tested. We're seeing higher lows, higher lows, higher lows, higher lows, higher lows. But it's not only about what we see. It's about breaking down the news together with the key levels to watch out for. So Tesla currently is trading around $429. And we're at critical juncture. So here's what you need to know. The key level you should watch out for is $440. Is it too small, guys? I'll make it bigger. Key level to watch out for. I'll pull here so we can discuss. Key level to watch out for is 420. This is the breakout level. Breakout level. If Tesla can break and hold above $440, we could see a bullish continuation back towards the previous high of $480. This could be a strong signal that the stock is in recovery mode. We're seeing a bullish pattern, and if it passes 440, I hope it hits the previous high of $480. However, $420 $420 is if pulls back. And this level to watch is for support. If the stock holds this level, it could be a good place to add or enter a trade. If it hits the 420, it might be a good place for you to add or enter. By the way, the all-time high was about here, $480. Sorry. So if it hits the 420, enter here. It might be a good place to enter, guys. So what is driving Tesla? Number one is Robotaxi and Optimus. Do you guys know what is Robotaxi? Anyone knows? Let me show you. Robotaxi. Robotaxi services. Tesla is bringing autonomous rides to you today. This basically will be a ride-hailing service, something like a taxi, which is fully automated using AI. This is and Optimus as well, of course. These are humanoid robots, and these are strong catalysts that could push Tesla higher. The potential for robotaxi services could add a ton of value to Tesla's business model if they pull it off. But there's a catch. Liquidity in the market right now is a bit tricky. While these catalysts are strong, if market conditions tighten or volume is low, it could limit the stock's upside. So my viewpoint, I'm leaning bullish on Tesla in short term. I'm leaning for bullish on short term, but it's important to be cautious. If Tesla can hold above $440, that's your cue to favor short-term longs, but keep the position size small. Keep position small until we see a confirmation. Wait. And volume matters. If Tesla can sustain a move higher with doubled volume, it could signal that the rally has legs. Without the volume, it's more likely to be a short-term bounce. And it did test. So the bottom line for Tesla, watch $440 for the breakout. If it holds, there's potential to see a return to $480. But watch $420 for support. If the stock dips there and hold, it could be a good buy zone. 420 could be a good buy zone, guys. Keep in mind, the volume will be the key for any continued bullish move. Pay attention to the volume, up or down, always. Now, keep in mind, always, volume will be the key for any bullish move. So that's the Tesla breakdown with the new updated news. Obviously, we live every day, so you guys can have more questions with the latest news. I try to keep myself updated, but if you guys can share anything, comment below, we can discuss. Let me know if you need more information or questions about Tesla. We can break it down together. Now let me ask you guys some questions. Let me ask some questions. All right, we're coming to an end, but I want to ask you guys some questions before you guys leave. So, number one, Q&A time for you guys and me as well. Will BOJ, Bank of Japan, delay Fed cuts and NVIDIA position adjustment? Let's break it down. Comment below if you guys have any answers, opinions. Yes. Strengthen USD. Yes, I'm seeing some correct answers. Yes, correct. Never mind if you don't know. I'll give you guys the answer. The big answer is yes. Yes. Why? Strengthen USD. And one more thing, guys. Let me spell it out so you guys can see. December odds. Based on the news, 47% trim. 50% cash for 164. Sorry, this is dollars. $164. Now let's go. So yes, strengthen USD, guys. And the December odds are 47, trim to 50%, and cash for $164. Cash at $164. Next. Bitcoin 80,000 hold. Is it a tech rebound linkage? Any opinions? Any answers? I want to see answers below. To be honest, Bitcoin hold has a 30% chance, which is largely dependent on a tech rebound, and watch closely before making moves. Watch closely before making moves. Watch closely before making moves. So yeah, it has a 30% chance. Now, next question or next sharing session more. S&P below 6,818. Full Dow defense shift? Do you guys think so? Okay, let me share my answer, guys. I'm excited about this. It might be a smart shift into safer stocks like the Dow. Keep 20% cash just in case. Since Dow is more stable now. Okay? Next. Question about Tesla. Do you think this is possible? Tesla 440 break to $500. If Tesla breaks 440, reaching 500 is possible, the volume needs to double for it to be real. This is very important. The volume needs to double for 500 to be real. For now, prioritize short-term longs if it holds above $440. Do you guys agree on this? I think we can all agree on this. And my last question for you guys now, please comment your answers below so I can see that you guys are also, if you guys have your own opinions, share with me. And lastly, Oracle debt burden. Is long AI worth? Let's see. Do you think it's a high risk zone? Comment below your answers before I give it. So, my opinion, Oracle's debt equals high risk play right now. But if you're looking at long-term AI, AI potential, it could be worth it. For now, post earnings is a safer entry point. Not before. Okay, guys? Let me see if you guys had any other answers. You guys can share with me. I'll make it bigger. This is quite important. Okay. If you have any questions, share with me. So let's review everything we've said. Currently, right now, it's time for positioning, paying attention to the key points, news, any key signs. Do not panic. Do not panic. We're entering a phase here. Fear is lower, panic is lower, positioning is clearer, sentiment is healthier. Smart investors look at these for these exact moments. So let me ask you, which stock do you think will be the strongest in the next 3 months? Tesla, Google, Nvidia, Intel, or Meta? Type in the chat. Let's see your responses. All right, drop your final questions in the chat. I'll answer as many as I can. And if I can't today, I'll make sure to keep your questions. I will answer them during the next live. All right. Thank you all for being here today. I appreciate every single one of you for tuning in. Remember, I go live every day. I'm Herdaily Trades. And this community grows because of you guys. So stay smart, stay patient, stay consistent. I'll see you tomorrow. Thanks for watching.